This is the first complete comprehensive example with adjustment of capital, dealing with the first method of adjustment of capital, where adjustment of the old partner's capital accounts is done on the basis of the new or incoming partner's capital. So this example sum will deal with this method of adjustment of capital. Let's go to the example sum. Example sum. Gautam and Yashika are partners in a firm sharing profits and losses in 3:1 respectively. The balance sheet of the firm as at 31st March 2019 was as follows. To the left of the screen we have the balance sheet given. To the right, additional information. Asma is admitted as a partner for 3/8 share in the profits with a capital of rupees 2,10,000 and rupees 50,000 as her share of goodwill. It was decided that, first point, new profit sharing ratio will be 3:2:3. Second point, machinery will be depreciated by 10% and furniture by rupees 5,000. Third point, stock was revalued at rupees 2,10,000. Fourth point, provision for doubtful debts is to be created at 10% on debtors. Fifth point, the capitals of all the partners were to be in the new profit sharing ratio on the basis of new partner. Any adjustment is to be done through current accounts. We are asked to prepare revaluation account, partner's capital account, and the balance sheet of the new firm. So here, the point 5, which says the capitals of all the partners were to be in the new profit sharing ratio on the basis of the new partner. So this tells us it's an adjustment of capital sum which is based on the first method, where the old partners Gautam and Yashika's capital have to be adjusted on the basis of Asma's capital. Also, the sentence any adjustment is to be done through current accounts tells us that the adjustment has to be made through the partner's current accounts and not by introducing or withdrawing cash. So we'll begin with the revaluation account. We'll go on to the partner's capital account. We'll make the adjustment of capital, and finally we'll prepare the balance sheet. Revaluation account. Left side debit side and right side credit side. Particulars. Rupees. Particulars. Rupees. The first point is about the new profit sharing ratio. The second point, machinery will be depreciated by 10%. So to machinery account, %10 of 2,10,000, 21,000 rupees. Further, furniture will be depreciated by rupees 5,000. So to furniture account, ₹5,000. Third point, stock was revalued at rupees 2,10,000. The book value of stock in the balance sheet 1,40,000. There's an increase of rupees 70,000 in stock. So by stock account 70,000 rupees. And the fourth point, provision for doubtful debts is to be created at 10% on debtors. Debtors amount in the balance sheet 80,000. So we'll create a provision for 8,000. The fifth point is about the adjustment of capitals. So we'll balance revaluation account. The credit side totals to 70,000 rupees. Total of the debit side is 34,000 rupees. Greater total on both sides. There's a gain on deducting 34,000 from 70,000, we get a gain of 36,000 rupees. So to gain on revaluation, transferred to partners' capital accounts. We have Gautam and Yashika. Total gain 36,000 to be divided in OPSR, which is 3:1. Comes up to rupees 27,000 for Gautam and 9,000 rupees for Yashika. So this is a revaluation account. We'll go on to prepare the partners' capital accounts. Partners' capital accounts. Left side debit side, right side credit side. Particulars. Gautam, Yashika, Asma. Particulars. Gautam, Yashika, Asma. We'll begin by bringing down the balance of the capital accounts by balance brought down. 4 lakh rupees for Gautam, 1 lakh rupees for Yashika. Asma brings in rupees 2,10,000 as capital. So by cash account, $2,10,000 under Asma. There's a gain on revaluation. We'll transfer the gain by revaluation account. As per the revaluation account, Gautam had a gain of 27,000 rupees and Yashika had a gain of 9,000 rupees. There are no reserves or accumulated profits in the liability side of the balance sheet, and also no accumulated losses of fictitious assets in the asset side of the balance sheet. We need to deal with goodwill. It says Asma bought in rupees 50,000 as her share of goodwill. So Asma's share of goodwill is 50,000. we need to find out who gains and sacrifices. So we'll do that in the working notes. Working note 1, calculation of gain or sacrifice of each partner. We have old profit sharing ratio between Gautam and Yashika given as 3:1 and new profit sharing ratio between Gautam, Yashika and Asma given as 3:2:3. For Gautam, let's do old share minus new share. 3/4 is the old share minus 3 divided by 8 is the new share. We get a positive 3 divided by 8. Gautam has sacrificed. For Yashika, old share 1 divided by 4 minus the new share 2 divided by 8 is equal to nil, no gain or sacrifice by Yashika. So the journal entry, working note 2, journal entry for goodwill. Asma brings in her share of goodwill in cash. So it's premium for goodwill account debit. To the sacrificing partner, who is Gautam, to Gautam's capital account. The entire 50,000 Asma share of goodwill goes to Gautam. So let's insert this in the partner's capital accounts. By premium for goodwill account, 50,000 against Gautam. We've dealt with all the items. We need to do the adjustment of capital. We keep the top half as the partner's capital accounts and bottom half as the working notes. Working note 3, adjustment of capital. Step 1, total capital of the new firm. Is equal to the capital of Asma, which is 2,10,000 rupees, multiplied by the reciprocal of Asma's share in profit, which is 8 divided by 3. Comes up to rupees 5,60,000 rupees. Step 2, new profit sharing ratio is given between Gautam, Yashika and Asma as 3:2:3. Step 3, new capitals partners. This we can get by taking the answer of step 1, which is rupees 5,60,000, and dividing it by 3:2:3. So we get, in the case of Gautam, it's rupees 2,10,000 rupees. New capital for Yashika, rupees 1,40,000. And new capital for Asma is rupees 2,10,000. Step 4, we need to get the adjusted capitals of the partners. Which means the capitals of the partners after all adjustments. We can refer to the top half of the screen where the partners' capital accounts are shown. In the case of Gautam, it's rupees 4,77,000 rupees. In the case of Yashika, it's 1,09,000 rupees. And in the case of Asma, it is rupees 2,10,000. Step 5, final step. Comparing adjusted capitals with new capitals. So in the case of Gautam, the adjusted capital is 4,77,000, which is greater than the new capital of 2,10,000. So the journal entry is Gautam's capital account debit to Gautam's current account for the difference, which is 2,67,000 rupees. And in the case of Yashika, the adjusted capital is less than the new capital. So Yashika's current account debit to Yashika's capital account for the difference, which is 31,000 rupees. So we insert these in the partner's capital account in the first half of the screen. To Gautam's current account, ₹2,67,000 rupees. And by Yashika's current account, 31,000 rupees. We insert the new capitals as balance carried down, to balance carried down. In the case of Gautam, it's 2,10,000 rupees. In the case of Yashika, it's 1,40,000 rupees. And in the case of Asma, it's 2,10,000 rupees. Let's total it. If both sides tallies, our arithmetic is right. Credit side total for Gautam, 4,77,000 rupees. Debit side total is also rupees 4,77,000. Yashika's credit side total, 1,40,000 rupees. Debit side total is also 1,40,000 rupees. Asma's credit side total, 2,10,000 rupees. And Asma's debit side total is also 2,10,000 rupees. So we've prepared the partners' capital accounts. On the top half of the screen, it is visible with the working notes for the adjustment of capital at the bottom half of the screen. So the first working note for the adjustment of capital, its first step was to calculate the total capital of the new firm based on Asma's capital, which was 2,10,000 multiplied by the reciprocal of her share in profits, which was 8/3, and we got it as 5,60,000. The step 2, the sum specifies the NPSR as 3:2:3. Step 3, we got the new capitals of the partners. The fourth step was the adjusted capitals of the partners. And final fifth step was to compare the adjusted capitals with the new capitals and put the difference in current accounts. Next, let's go and prepare the balance sheet of the firm. Balance sheet as at 1st April 2019. Left side liabilities, rupees, and right side assets, rupees. We'll begin by the liability side items. First item, sundry creditors, rupees 50,000, no change in value. Bills payable, ₹30,000, no change in value. We'll bring down the partners' current accounts, which have a credit balance. So Gautam's current account 2,67,000 has a credit balance. Gautam's current account 2,67,000 rupees. We'll insert the balance of the capital accounts. Gautam, Yashika, and Asma. Balance carried down 2,10,000, 1,40,000, and 2,10,000. ₹2,10,000, 1,40,000 rupees, and 2,10,000 rupees. Total 5,60,000 rupees. We'll insert the items on the asset side. First item, furniture. We need to reduce 5,000 rupees, so now it's 55,000 rupees. Stock. Stock is revalued at 2,10,000 rupees. Debtors. Original figures 80,000 rupees less the provision 10% on debtors 8,000 rupees. So outer column we have 72,000 rupees. Cash, the original figures 90,000 plus the capital brought in by Asma, which is 2,10,000 plus premium for goodwill 50,000. So it comes up to 3,50,000 rupees. Machinery. There's a reduction of 10%, 21,000 rupees. So right now it's 1,89,000 rupees. And we'll see the partners' current accounts having a debit balance. It's Yashika's current account, 31,000 rupees has a debit balance. We've completed the items. Let's check if the balance sheet tallies. $9,07,000 liability side total. Asset side also totals to 9,07,000 rupees. So this is a balance sheet prepared by us. I'll remove the split and we can view the entire answer. We began with the revaluation account, followed by the partners' capital accounts, and the balance sheet, and finally the working notes.